Hey, good afternoon. Happy Friday, March the 5th. Mark Milam here, your mortgage professional with Highland Mortgage, coming to you with this week's interest rate summary and market update as we head into the first weekend in March. Wow, the year is just flying by, and really the past 4 to 6 weeks have really been tumultuous weeks in the mortgage market. If you've been paying any attention whatsoever, you may be drinking Pepto-Bismol and have a little bit of heartburn as you're watching this mortgage market just fly up and down, just all kinds of activity. Let's take a look back and just kind of give some perspective. You can see really from November, let me go back even further, really from around November through January, relatively flat, slightly improving market in the mortgage-backed securities market. Green days are good days where interest rates are going down, getting better. Red days are bad days. And you can just see we were on this really calm trajectory all the way through January the 5th. And then, wow, woof, this big dip right here caught a lot of people off guard. This was the senatorial election here in Georgia. And then we started to plateau, and then, wow, ever since February the 9th, we have just seen some of the most aggressive market movement that I've ever witnessed in the 16 years that I've been doing this. Just a precipitous fall off in the value of securities, and then a rapid bounce back on February the 26th, only to fall off again here this week on March the 3rd, March the 4th, and then here we are on March the 5th. What is behind this most recent yo-yo of mortgage-backed securities? Well, what happened, really the prevailing sentiment is the vaccine's taking hold. The country is looking at positive numbers for GDP. The country's looking at maybe inflation in Q2, Q3, Q4 that's going to be right up there over the target that the Fed has set. That's a little bit of a concern. And then we've got this stimulus hitting the economy, right? This $1.9 trillion stimulus package that's going to hit the economy, flooding us with cash to spend. And then how are you going to pay for that stimulus? And how are you going to pay for the infrastructure bill that's behind it? Well, you're going to auction off government securities, and those auctions are not going particularly well. All of this translates into upward pressure on rates. So why did we start to see this improvement? These green days right here, where did that come from? Well, where that came from was a market sentiment amongst traders, amongst experts, that the Fed was going to employ something called Operation Twist, where the Fed starts to unload shorter term, shorter maturity bonds and start to pick up and purchase longer maturity bonds to put a little more pressure on the long end of the spectrum and drive long-term interest rates back down. That was the prevailing sentiment. That's where we thought we were headed until yesterday. Yesterday, Fed Chairman Jerome Powell met in a Q&A session with the Wall Street Journal and really gave no such indication that the Fed would be employing any kind of Operation Twist. As a matter of fact, he really didn't speak to it at all and thought that what's happening in the market is a very healthy progression towards a rebounding economy, and not concerned at all about inflation. And boy, that news did not go over well with bond and stock traders. If you watched the stock market yesterday, you saw, what was that, about a 400 or 500 point plunge. If you watch bonds, you can see what happened here with mortgage-backed securities yesterday, a really heavy decline in mortgage-backed securities. So it's not been for the meek these past few weeks in the world of mortgage interest rates and mortgage-backed securities. A lot of activity, a lot of uncertainty. One day it's you think things are getting better, and then the next 2 days are a bloodbath. So important to keep watching this as we progress through the next 90 days or so. What's going to be really interesting is when we get to the other side of this stimulus, when we get maybe 120, 180 days down the line and the stimulus has pushed through the economy, because it's ephemeral, it's temporary. And then once we see what happens on the other side there, are we going to settle back into sort of a recessionary period, or will the economy continue to gain steam throughout the fall and into winter of 2021? Very interesting to watch. Now, in the short term, we have something at Highland Mortgage that can help ease a bit of this pain, and it's our Step Up program, which is really like a temporary buy down program. So for instance, we have a 2-1 step up or a 1-0 step up, meaning your permanent rate, your final interest rate, let's just call it 3 1/4 for the sake of for having a number. Let's say your final interest rate's 3 1/4. Well, the first year's interest rate is going to be 2 points below it if you employ the 2-1 step up. So you'll start at 1 1/4. Your second year's interest rate will step up to 2 1/4 until you perm up to your final interest rate at 3.25% in year 3. Now, we also have a 1-0 program, meaning your first year's interest rate is 1 point below your permanent rate. But these are great solutions for people who are buying a new home yet haven't sold their existing home. They're going to be carrying 2 mortgages, and they need a little bit of bandwidth, a little bit of breathing room This 2-1 buy down will give them that and give them the opportunity to unload or sell this existing residence in the coming years as they step up to their final permanent payment. It's also a great solution for people who know their incomes are going to increase in the coming years. If you're on a good progression with your company or in your particular industry and you know that your salary is going to be increasing in the coming years, this is a great program to step you up into that final monthly payment as your income steps up over the next couple of years. If you have any questions about the Step Up program or interest rates in general, feel free to email me, mark.milam@highlandmtg.com, 404-395-1102. Have a good weekend, everybody.